All right, we need to talk about the S&P 500 and the Nasdaq 100 going into tomorrow, Monday morning. Now, I really don't do these Sunday breakdowns as often anymore, but I think it's important to look at the major levels of where we're sitting. So today's not going to really be, day trading or quick setups or anything like that. It's going to be more of a broad spectrum of where we are on this entire move. So I kind of want to do a full market kind of breakdown. Won't be too long. It'll be a little bit shorter than my normal videos, but we're gonna get right into that. Before we get into that, I have to ask you to consider doing two things: liking and subscribing. Again, every single day I'm posting these videos. You can see literally every single day I'm posting these videos for you guys, unbiased and going over the major news in the market. So I have to ask you to consider liking and subscribing. Helps out a lot. Before we get into this as well, I want to talk about the big news and kind of jump out of the way here. So I like to not waste too much time, but you saw basically on social media, there's an emergency Fed meeting coming in, and this is what it is. You have your closed board meeting October 3rd, tomorrow morning, and it's not really that big of an emergency. I kind of think they might be blowing it out of proportion, and if you actually look on the board as well, they do this almost monthly. So it's important to look that this is kind of a regular thing. They are quote unquote expediting it, but it's worth mentioning that it doesn't look to be anything too big. They already made their rate hike decision, and I don't anticipate they're going to go back on that. So to review and determination of the Board of Governors on the advance and discount rates to be charged by the Federal Reserve Bank. So I just don't think they're going to make any big changes, and we'll see what happens, but I'm not really putting all my eggs in this basket, assuming that we're going to crash based on this meeting Monday morning or afternoon, wherever it is. So that's the big thing to see there. But what we're gonna do is spend a lot of time more on the 4-hour and the 1-day charts, and then we're gonna kind of come back down to where we're at now. So essentially we have 3 levels that I've marked out here on the chart, and I kind of want to talk about these. I'll go into ES, which is the S&P 500, but I love to focus on the Nasdaq because in my opinion, the Nasdaq's been our leader here on the market. So as we look at what's going on here, clearly we are in, a downtrend. Now, I also want to comment for people saying that we are quote unquote not in a bear market, not in a recession. I don't really know what you consider a bear market or a recession, but if we look back at this market, I mean, you have to consider, depending on the amount of time that we've been spending on the downside and the decline, that obviously, in my opinion here, this proves to be some sort of quote unquote bearish market compared to previous years here, basically going all the way back to, as far as we can go back, right? So I just want to point that out. And again, everything I say here is just my opinion, so do your own DD, and I try to back it up as much as possible so you don't have to do that much checking up on me, but do your own DD. So as we look here, this is ultimately where we're at here. We're sitting at these previous highs that we had established basically on July 13th, 2020, then double topping there July 22nd. This line goes all the way back to where we basically bottomed out this past June and July right here, June 15th, June 16th, roughly, right? And then we finally just broke that on Friday. Now, the important thing to realize here is as we look at the Nasdaq, it's finally just breaking here on Friday, basically the end of the day. If we go over to ES and Dow, those have broken already. They've already been slipping through this range, right? We already had 3 days of being down, and you finally held below there. If we go to Dow, you can actually see as well, YM right here, you can actually see that you broke this a while back as well. You can see you broke this going into the 23rd. So you've almost been sitting under this level for an entire week. You can also see that you had this back test right there, getting rejected 1, 2, 3, 4 times on a daily chart as well, eventually just collapsing there. So as we come back to Nasdaq, I just want to highlight that the Nasdaq is the last to break here. And so people are like, well, Tyler, why do you think Nasdaq is leading? Just because in the overall grand scheme of things, we have not had follow through on this downside yet until the Nasdaq has broke here. And then prior to this as well, Nasdaq, in my opinion, was leading as well. So just things to be looking at, things to be considering. Also going in here as well, there's a few stocks that are holding up when we talk about the big names. And if you want to look at the big name stocks or the primary holdings of the S&P, I love looking at what we call the big 6 here. And this is a really just great way, in my opinion, just to view the market and to help you understand some stuff. So when we had that breakout, obviously we were looking at the big 6, Apple, Microsoft, Nvidia, Google, Amazon, Tesla. You had that breakout, awesome, yada, yada. Now you can see that we've broke back down into this range, retested, pushed back down, and now we're almost back towards those lows. And from this, we can also see that it's very important to realize, looking at some of these big stocks sitting in this, and Meta's not in this anymore, but we can see Meta's broken well below 52-week lows and ultimately hit our target at 137 already, getting rejected even further, looking more and more bearish by the day. Going over to Microsoft, looking here, you've broken below those, 52-week lows, well below, retested, and now you're plummeting back down to 232. So you're starting to see some of these bigger names that were kind of there, Nvidia as well, really slipping down, right? These are making well below those previous 52-week lows that we did have. But right here was back, in May. So as you look here, you have to be concerned, right? That this has to mark on your chart that there's some danger kind of happening here. And ultimately, in my opinion, Nasdaq, S&P look like they have a lot more downside just based on some of these charts really slipping below their lows already, right? So that's the really big concern here that I want to focus on. But I also want to focus and tell you that a few of these stocks like Amazon have been holding up decently compared to those, right? They're holding up a little bit better. Apple holding up a little bit, Apple started free falling a little bit, but up until this point, you were holding up better, right? Tesla as well. Like you still have a lot more room to go down before you hit those 52-week lows. But these charts are definitely worth watching because you can probably make a lot of money here if you time this right, if we do get that follow through dip. So these are all just things I'm looking at, things that I'm watching right now. Going back to indexes, though, that's the main thing. Is as you get into NQ and then ES, you got to be watching these things, and there's kind of a lot on your chart to watch. Now, what I want to talk about too is before we start really seeing a lot of downside, I believe personally that you are in a range of support, and I believe that if you go back, you can see that obviously this was your previous top here. You were holding this range locally about right here. This is where you were finding a lot of support, right? Now, it's worth mentioning as well that you're going to be coming down into these kind of previous lows of September 2020. So I believe this whole range, basically from 10.9 all the way down to around 10.65 to 10.7, is going to be tough to get through. I don't believe you're just going to see a straight drop from here. So I don't think you're just going to break out tomorrow and just, shoot down. I don't think that's going to happen, right? But it's worth mentioning and worth watching this range because the big part here is looking for follow through, looking for support from this range. And what I wanted to just highlight really quickly is going to be the VPVR. And this is a really helpful tool if you don't know. Basically, it just shows you where there's maybe liquidity gaps, helping you find supply and demand regions, helping you along that way. But it really just provides a visual, in my opinion, for a lot of traders. And so when we're looking here, when you have these gaps specifically, like you can see right here from basically 10.9 all the way down to locally about 9.5 to 10, this is an area of danger. And what does that basically mean? It means that it's a liquidity gap. And before I go any further, I want to give a special shout out to HankaTrade. This is who I am currently using when I'm trading futures in the after hours or anything like that. You already know where I do my Bitcoin trading, and now this is where I do my future trading using Bitcoin as well. You can trade the NAS and the SPX basically 24/5 using their platform. And when you're looking at account types to be using, the one I'm using is going to be the ECN Plus. I'll explain why, because I'm going to be doing a $1,000 challenge here on the channel, as well as most likely the new channel as well. So you can follow me along using the platform, learn how to use it as well if you're interested in using anything like this. And just so you know, they are also running a bonus, giving you 100% deposit bonus on whatever you're using. You can always withdraw your initial deposit, but you need to look at the actual rules for depositing the 100% bonus when you are trading it, because there are certain rules that apply as well. But they have a lot of promotions going on, so I would definitely be checking them out right now, because this is how you can trade some of the futures that I'm talking about here in the video. There's not much historical support in that range. So if you go back and look at other stock charts and things that we always look for, like Amazon, AMD was a great one, Nvidia, you can spot these gaps and really start to spotlight when you're going to start getting a lot of volatility. So for me, it's not really hard to comprehend the fact that we are finding support in this range here from 12,000 and down to 11, because this is where a bulk of your volume is right here. Between 12.1 to 12.5, you have less, so that's where you're volatile up and volatile back through. So just giving you a visual of what's happening and where you're at. So I do believe right here as well, 10.9 to 10.65, you still have some volume in there as well. But again, as you break below this, just giving you a visual picture here, you could easily start seeing some slippage all the way down to locally those pre-COVID highs. That ultimately is our target here. That's my target for this market. That's not saying you can't go lower, but that's been our target basically since March. And that's what we've been looking for, at least to get a really nice bounce on the market. Will it be as good as this? Or the one back we had, March, or the one we had in June? It's hard to say, but I believe you're going to get some sort of bounce from this range when you come down to it, if you do come down to it, right? That's just, what I'm looking at, and I'm ultimately having a target. I recommend having targets on your trends, what you're looking for, and having a game plan with any trade you're taking. Going into ES, as we get into this, in my opinion, it looks a little bit like you're getting closer than on Nasdaq, right? You don't really have that much more room. And I think as we bring up this VPVR to show you the VRVP, sorry, you can see the liquidity gap maybe a little bit more clearly, and you can see that you're already entering it right now. So down to this 3,500 level seems like it's very imminent unless you start getting a bounce very soon. You can also come back and bring this level that we were previously holding back here, and you can see this was that flipping range, right? Your highs, you flip back, you can see he held it coming back into here. So if you start to hold below this 3,600, 3,630 level, it's going to be dangerous in my opinion. It's going to have a lot of worrisome behavior here, and we could easily start seeing that volume push down. But again, look at all the volume right here. So we can see that this is going to be a big shelf. This is going to be a support, if you will, as you get closer to 3,400. Now, do you hit 3,400? And I don't like to give you specific targets or say we're going to hit X, we're going to go to Y no matter what. I never really do that. I try to give you my opinion, and then hopefully you can regulate and go over with the market as you're trending down to that range as far as day trading, right? But locally, these have been my targets for essentially the past 3 to 4 months. Maybe even longer now. Actually, it's almost like 6 months now, but it's been so long because we kind of had this downtrend. So this is what I'm looking at. This is what I'm playing by ear. This is what I'm watching, right? Now, I do want to go into VIX, DXY, and just go into what's happening here. And I'm actually going to go into DXY first so I don't lose you guys. DXY has been obviously one of the best indicators, just showing you risk on, risk off, as well as J and K. Those have been probably the best indicators that there are. So I want to highlight that. Now, I have a lot of people commenting on DXY, commenting on VIX, and I just want to be very clear here. If you don't know what's happening right now, you can a quick Google search, China dumping the USD. Quick Google search will tell you this, right? But what I want to tell you is people are saying, well, look, why is the DXY not pumping while the indexes are dropping? Why, right? And I want to break this down. Like, if you're looking at this, you can't just chart the dollar. You can't just say technicals are everything, right? You have to pay attention to key news that's out there. I want to make that extremely clear. Like you can't just point numbers out there and make targets. There's usually some type of logic for what I say, and I encourage you guys to have that same type of mentality, is try to back it up and proof of concept here. Now, with the dollar, it was easy to know going into Friday you were going to see this drop here. But you don't need to see the dollar go up in order for the stock market to go down. It's worth mentioning going into this news that this is actually pretty bullish in my opinion. So if you don't know, China was geared and told by their own government to start dumping the dollar in order to prop up the yuan. This is what they wanted to do because they're a communist country. And of course, surprise, surprise, their currency is becoming less and less worthwhile to own, right? So as you get in here, the fact that we have one of the biggest country, second biggest under India, right? Biggest country, right, in the world, dumping our currency, and you're still seeing it kind of hold up at the end of the day going into Friday, should tell you that the dollar is in fact still bullish, right? So if you really come in here, you can see that we've had pullbacks. We've been watching them, the key levels, et cetera, right? You can still see you're holding your previous highs, right? These were your previous highs that you had right here, and you're overall holding that range. And what I'm looking for here on the dollar is to get back above this 12.5 region and start pushing back up. Ultimately, that's what I'm targeting here. You can actually see the downtrend as well. Again, haven't really done any charting on this either. But you can still see you're clearly following the downtrend and you're trying to break up out of it, even with countries trying to devalue the currency based on propping up their own currency. So you have to understand the news that's going on here. And just because one of these charts may point to some downside does not invalidate the whole entire theory, right? So you need to be paying attention. It's not so much as me looking at one specific thing to see if the market's going to move in a direction. It's me using all of my tools, using them together, right? So going into J and K, one of the best things for showing risk on, risk off. As J and K goes down, this is a asset of risky bonds, right? So as people buy risky bonds, typically they expect a higher movement on risky stocks and risky assets, such as, Qs, heavy into tech, etc., right? So with this bounce that we saw back in June, in tangent with, the bounce on the market, guess what? Now we're seeing a steep decline. We're seeing a well below break here, and now you're actually breaking the higher lows you were trying to form here. on the past 2-3 days, right? So as you come in here, you can see breaking below right now. So again, pointing for me to more downside here. So these are just things that I'm looking at, how I'm trying to look at the market and get a broad spectrum look at what's going on here. Next up, I do want to talk about yields because, they are so inverted right now. This has been pretty worrisome. Now, you are seeing a little bit of a pullback here, and people have been asking me, Tyler, you're seeing a pullback, et cetera, et cetera. It's important to know here. Yes, yields, you need to understand, they pushed basically to their highest point since, the dot-com crash, higher than the housing market crash, higher than 2018, et cetera. But it's worth mentioning, I don't believe this is over. I believe they're going to keep raising rates. I don't believe they're done raising rates. And as long as they are raising rates, you should expect the yield inversion to stay on this upward trend, okay? So that's what I want to expect and look at here. Also, I want to talk about people saying that they expect, for some reason, I've been seeing people say that they expect, a positive outcome in the market with them raising rates. Kind of wild, and I don't really know what we're talking about. But the problem right now is that we're raising rates back to back to back every meeting, okay? So if we go back to previous markets, right, you have a slower rise on yields because they're gradually raising those rates, right? They gradually raise them, so typically they can control how long it takes for rates to get to this inverted point, and by the time they do, they can start pushing them back down, right? The problem here is that you did that, you had the overall big drop on rates, and then 2020 happened with COVID, and then you had to use all your economic tools, and then you were actually rising before they even started raising rates, and this is really where you started raising them right here. So overall in the market, I still see a lot of potential for that downside, and that's what I'm ultimately looking for. But I encourage you guys to just overall have targets marked out, have key levels marked out on your charts, so you're not really taken by storm or taken by shock when you start to get into these ranges, because ultimately the range that I'm watching is if you can start breaking below 10.6, if on ES you can start breaking below, that key level we mentioned here as well, down here. If you can start getting below like the 35.5 range, right? Because that happens, you're going to see a lot of illiquid behavior on the market and a lot of volatility. So that's what I'm preparing myself for, and that's what I'll be watching. Again, if you want to see the charts that I'm looking at, it's basically just ES. That's all it is, ES mini futures. That's SP500 futures in Q. So I'm trading there. That's what you need to be watching and paying attention to, because that's going to tell you how the market's going to move. So I have a lot of people asking me about, Tesla, Amazon, Target, etc., random stocks, right? Stop worrying about your specific stocks. Focus on the indexes, people. Because if you focus on the indexes, you're going to understand and know what to expect with your stock, and you won't be surprised. It'll all just come together for you, and it'll all make sense. Very, very simple. See you tomorrow.